Thank you for joining us now. Let's get into our second conversation amid a rising fiscal deficit. Of course, the bullish performance of the stock market remain impressive. So let's get talking now to see what is happening, of course, in the stock market. Why did it remain bullish despite the headwinds across the globe and uncertainty? Let's get talking. I'll be joined by Mr. Temitope Omoshi, Invest Management Strategy at AfriInvest. Thank you so much for joining us, Mr. Moshi. We appreciate your time. Now, let's get talking now. Amid rising, fiscal deficit, we're still witnessing bullish sentiment in the market. Why do you think this is so?
I think that, I have to look at the two issues in isolation. So we are seeing the rising fiscal deficits, and that's a bit disturbing, especially if we are not seeing a line of sight to strong revenue mobilization. Well, we understand and we are quite abreast of what the current administration is doing regarding increasing government revenue. For instance, we saw the Fiscal Policy Committee that was constituted by the federal government to come up with policies that will spur government revenue. Not just that, they would also follow up with the implementation, because you would agree with me that in Nigeria, our challenges or our challenge is not about that of policies. No, it's about the implementation of policies. So we are delighted that in addition to ingenious policy, trust that will be proposed or that have been presented to the president, we are also looking at the implementation. And I think more interestingly, we are also taking cognizance of the fact that I think in the course of 2 weeks, this president spoke to the fact that ministers and all government appointees will be held accountable in terms of their performance vis-a-vis their respective key performance indicators. So I think by and large, yes, the fiscal deficit outlook is not so great. But if you are seeing some of these positive moves, and we are able to see, unrelented commitment to achieving, this policy trust, we believe that yes, fiscal deficit should be reduced substantially, because for every fiscal deficit, there are consequences. As fiscal deficit is rising, there has to be financing for those deficits. And for a country like Nigeria, we've seen most of those financing coming from debt financing, and most of this debt is even coming from domestic borrowing. Right now, in addition to the ways and means, if you look at our debt stock, is already getting towards the IMF threshold of about 55% for developing countries. Nigeria is around the 40% threshold. We used to, in fact, less than 3 years ago, we're barely 30%, but because of the ways and means and that was added, now we are already above 40%. So there are consequences for fiscal deficit, because as fiscal deficit is rising, government has to finances. So currently, though it's a bit delighting to see that this for next year, government is looking at about 9 trillion fiscal deficit compared to what we have for this year, which is about 11 trillion. And if you look at those deficit to GDP ratio, the government has set about 3% threshold for itself. If you look at the Fiscal Responsibility Act of 2007, but this year we've seen fiscal deficit at about 5%, and in the next 3 years, if you have to go by the medium-term expenditure framework, is expected to stay around the 3.9, 3.5 threshold. But what is even more important is, the deficit that is not just debt-induced. So when we look at fiscal deficit, we look at it in two ways. One, there's what we call the primary balance, and there's another part that we call overall balance. So if the primary balance is positive or is tending towards positive, it is a good signal that the economy will stay afloat at some point. So what do I mean by primary balance? Primary balance is when you deduct government expenditure excluding debt. when you deduct government expenditure, excluding debt from its revenue. So, because one may want to say that if government is consciously managing the debt, debt service, may not really reflect the true picture of the fiscal deficit or budget deficit condition. So if the primary balance is positive, it's already telling us that, at some point in the future, our debt, obligation, or the, debt acquisition would reduce somewhat, and at some point we can now begin to look at, a positive primary balance, and maybe at some point again positive overall balance, because we are already seeing how rising fiscal deficit, especially borrowing that are less productive or that were less productive in the past, has accentuated money supply in the economy. And we're already seeing the impact on inflation, exchange rates, and other areas of the economy. So the rising fiscal deficit is disturbing, but then if we have the right measures and the implementation of some of the plans and policies that have been set out by this administration, once we're able to follow through with all of them, we believe that there's a very good feature that lies ahead of us. And if you now take it to the capital markets, well, you had mentioned what is happening at the stock market. I think a bit of positive sentiment that we have seen, I can't even call that a bit, because market is already around the close to 40% year-to-date performance. That is quite impressive. What investors do generally is to compare return with inflation. So if you have to go by that, it shows that the stock market is actually giving investors a fantastic return, higher than inflation, right? And that is quite applaudable. One can actually adduce what is responsible for the positive sentiment in the stock market to the recent development in the economy. I think a bit of optimism came in after this new administration came on board, because the old rally started and was sustained from May when the administration came in, and right now we are seeing the NGS Oil Index at record high, around the 15-year high. So that shows that there's a lot of optimism, and this is not just about a kind of irrational exuberance or animal spirit. No, if you check fundamentals of companies, it also supports what we are seeing in the market. For instance, if you look at the performance of the market, right, you would observe that the positive sentiment is coming largely from the financial sector, the banking sector, right? And the reasons are not far-fetched. A couple of banks, delivered significant, and fantastic financial performance, and this could be linked to increase in FS gains. In addition to the fact that a lot of them made so much money and grew their earnings, their interest income, they also grew their non-interest income plus the FS gain. A lot of these financial institutions were able to deliver very good earnings, and then that even makes the market more attractive, because now that banks and other companies in the market delivered good earnings, it's already telling us that price to earning ratios, which is just the simplest way to value an entity, or just to see if a company is attractive for investing, is already down for a couple of top banks. That is showing that there are lots of opportunities in that regard. And for other sectors like the consumer goods sector, ICT, and all that, that suffered a bit of drawdown when you check their bottom line. I mean, their profitability, profit after tax, and a number of other return analysis from the return on assets, return on equity, right? It's not just about their revenue, right? It's about the fact that some of them suffer some losses from FS, right? It's just more like a zero-sum game. As banks are making a lot from FS, depreciation, other real sector of the economy, is suffering a bit of setback. But what is even delighting to analysts like myself is the fact that some of these companies, if you look at their revenues, right, is quite fantastic. And if that's, if I had to go by that trend, we know that FS loss is an unsustainable loss. We know that they are unsustainable gains. They are also unsustainable loss. So if you are to remove the impact of FS loss from some of the books of this of these companies, from MTN to Airtel to a couple of even companies within the consumer goods space, right? You would observe that some of them would have been able to stay afloat. So looking at it from that angle, because investors would put their money into the stock market based on what expectation. So if we are to look at those unsustainable losses, right, that tells you that some of these companies are now quite attractive, despite the fact that market is up. Some of them have gained, but if you still look at their price to earning ratio, that is what it will cost you to buy their earnings, right, to their performance, is
Okay.
still a lot more attractive. So I would say that is what is kind of driving the market, plus the fact that we've seen some kind of pro-market government policy in recent times that signals positive, sentiment for the market at large.
Let's talk about inflation a little bit. You made mention of inflation. Talk to us. I mean, if you look at the, September inflation was high against analyst expectations. So what's your outlook for inflation, October inflation? Now we're in November with regards to sentiment that is currently playing out in the market. Hello, Miss. Can you hear me?
Very well, please.
Okay. So did you hear my question?
Yeah, you were asking why inflation. I couldn't pick that, please, if you
Yes,
can
I was
repeat
asking you
yourself.
to. Yes, I was asking you to give us your outlook for October inflation, given the report, inflation report for September, and you talked about the fact that investor sentiment is still very strong in the market. So, with regards to the positive sentiment recorded in the market at the moment, what's your outlook for inflation for October?
So what we think about inflation, is expected to stay elevated, though that does not sound so good to a number of investors to know that price pressure will remain. And the reasons are not far-fetched, even if you're not looking at the fundamental factors that are driving inflation, but because the current CPI is very high, the base effect is expected to keep inflation elevated. And whenever you see month-on-month inflation, higher than 1%, 1.5%, and the last time we saw it above, 1.5%, shows that inflation will still remain elevated. And at some point, it could even touch 27% and all that. But we think that next year it could decelerate on the back of base effect is there, and the fact that some of these shocks that we are seeing to commodity prices could exacerbate. So for instance, oil prices contributed to some of the shocks we are seeing, right? And we believe that what is happening globally from the US economy as a result of increase in interest rates, you will observe that the economy is still, though relatively strong, but there are a bit of concern that it could slow down. From China, the economic growth is not so great as well. So if you look at the outlook for economy and the fact that there's still an ongoing war between Israel and Hamas, and that is a downside risk to global economic growth and oil prices. So if we look at all of that, it's expected to put a bit of, lead on rising oil prices, and that could be positive for inflation in Nigeria. Secondly, if you also look at exchange rate pressure, because you would observe that the recent inflationary pressure we have seen in Nigeria, say in the last 3 to 4 months, is not just limited to the just headline inflation, food inflation. No, it's cut across all the CPI components, which shows that the exchange rate is really affecting is affecting commodity prices in Nigeria. So, but we've been seeing a bit of policy, implementation or strategies by the CBN to stabilize the FS market. So long this is sustained, right, we believe that it should also support, price pressure in the near term. That is for 2024. And I should also speak to money supply, because we believe that inflation, as Meta Friedman has postulated, that inflation is always and everywhere a monetary phenomenon. We've talked extensively about the impact of the huge ways and means that we saw in the last, in the last 4 or 5 years, and the impact on commodity prices. We've always explained that in Nigeria, money supply is rising faster. So, people would just ask you that a lot of people don't have money, but you say that money supply is growing faster. But the explanation to that is money supply is rising faster than available goods and services. So, for instance, if you have 100 naira and you need two bags of yam, you only have one, despite the fact that the 100 naira is below, poverty line, right? Right. But because you cannot get enough goods and services, prices are rising. So we have so much money in circulation compared to the level of goods and services. That's why, despite the fact that, exchange rates kept rising, we've seen significant importation, right? We at AfroInvest, we did a bit of analysis of our import bills. We observed that in the last 4 years, it seems Nigerians were not even disturbed by exchange rate depreciation at all, because our import bills every month was not less than about $3 billion dollars, despite the exchange rate depreciation. Ideally, as a currency is depreciating, it should discourage importation and encourage export. But in Nigeria, it seems, because there are no enough locally made products and all of that, people still have to import against all odds. So with the policies around FS, right, and some of the policies we are seeing by this recent administration to support the real sector of the economy, we believe that in the medium term, say next year, we should see a bit of stability. And I also talk about money supply, right? And we've seen some moves by the central bank, ranging from the fact that from standing deposit facility, the cap for banks used to be about 2 billion. They've exceeded that. And for OMO, I'm sure you follow the trend about OMO, and we've seen series of OMO recently. All these measures are to address money supply. So putting all of these things together, we believe that in the medium term, inflation should decelerate, but for the rest of this year, it's most likely going to stay elevated.
All right. I think, we'll just have to leave it there. Quite a lot to say coming from you there. Thank you so much for your time, Mr. Temitope Omoshui, Investment Strategy Manager at AfriVest West Africa. Thank you for coming on Business Nigeria. Have a great day.
Most welcome. Thank you.